I used to think investing was only for the rich, but boy, was I wrong. Okay, so you guys know how we're always talking about ways to make our money work for us? Well, today we're diving into something that could be a total game changer for your finances: dividend funds. I recently came across this article from CNBC that got me thinking, and I just had to share it with you all. So buckle up, because we're about to explore how these little financial powerhouses can potentially transform your investment strategy. All right, let's break this down. Dividend funds are basically like the overachievers of the investment world. They're mutual funds or ETFs that focus on stocks that pay regular dividends. You know, it's like having a bunch of little employees working for you, sending you paychecks just for owning a piece of their company. Pretty sweet, right? These funds aren't just about the payouts. They often include stocks from solid, established companies that have a history of steady growth. So you're not just getting those regular dividend payments, you're also potentially benefiting from the increase in the stock prices over time. It's like having your cake and eating it too, financially speaking. Now, I'm not gonna lie to you guys, dividend funds aren't all sunshine and rainbows. Let's talk about the good stuff first. The obvious perk is that sweet, sweet passive income. It's like getting a bonus just for being smart with your money. Plus, these regular payouts can help protect you against inflation, which is basically the financial equivalent of a supervillain trying to erode your wealth. But, you knew there had to be a catch, right? Dividend funds can be affected by market volatility just like any other investment. And during tough economic times, companies might cut their dividends, which means less money in your pocket. It's not all doom and gloom, though. You can totally minimize these risks by diversifying your investments and doing your homework. Remember, knowledge is power, especially when it comes to your money. Okay, so you're sold on the idea of dividend funds. Now what? First things first, you need to figure out your goals and how much risk you're comfortable with. Are you looking for growth, income, or a bit of both? This will help you choose the right funds for your portfolio. Once you've got that sorted, it's time to do some research. Look for funds with a solid track record and reasonable fees. And don't just set it and forget it. Keep an eye on your investments and be ready to make adjustments as your financial situation changes. It's like, you know, tending a garden. A little regular maintenance goes a long way. Now, I know what you're thinking. Does this stuff actually work in real life? Well, let me tell you about Sarah.
I started investing in dividend funds 5 years ago. Now, I'm earning enough in dividends to cover my monthly grocery bills. It's amazing to see that real money coming in.
Sarah's dividends have grown steadily, now covering a significant monthly expense.
And Sarah's not alone. I've heard from so many of you who've used dividend funds to boost your income and grow your wealth.
Dividend funds can be a solid addition to a well-rounded investment strategy. Start small, reinvest your dividends if you don't need the income right away, and always do your own research before investing.
The experts all agree. Start small, reinvest if you can, and always do your homework before jumping in. So there you have it, folks. The lowdown on dividend funds. They're not a get-rich-quick scheme, but they could be a great tool for building long-term wealth and generating passive income. As always, I encourage you to dig deeper, maybe chat with a financial advisor, and figure out if dividend funds are right for you. And hey, if you found this helpful, smash that subscribe button and let me know in the comments about your experiences with dividend investing.